Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth, and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss weekly trends in the Nasdaq-100 as we round out our coverage for the year on what's been a remarkable year for the index, Ryan. Even without the COVID-19 pandemic, the Nasdaq-100 performance was quite incredible.
Yeah, it really has been. I mean, for the year, you've seen it extend its lead against the S&P 500 and certainly other kind of value indices. When you look at this week, though, it's sort of looking a little bit like March, right? You have QQQ up nearly 1% over the course of the week, with the S&P down 0.18% and the S&P 500 value down 1.45%, kind of ending this hot streak that it's been on over the past couple months. And you sort of see developments out of the UK, a new mutation of COVID, and this is continuing with some of the unfortunate numbers that we're seeing across the country. And we're almost seeing that initial kind of COVID trade where investors are gravitating towards growthy companies, certainly the work from home companies. Today sort of bucked that trend when look at the newly announced bipartisan stimulus bill worth around $900 billion. President Trump came back and said $600 is not enough for Americans, and called out a number of what he said were wasteful portions of the bill, including a lot of spending to foreign nations, and called for the payment for U.S. citizens to go up to $2,000. And I think markets largely took this as a positive, not necessarily a this isn't going to get done. Instead, it's more money in Americans' pockets, and hopefully more money to spend ultimately. But I think when you look at last week, more of sort of a retracement back to some of the COVID worries, and certainly more leaning towards some of those work from home stocks.
And Ryan, when we take a look at the Qs versus the SPY, of course, the ETF that tracks the S&P 500 index, what are you looking at here?
Yeah, so again, sort of from a sector basis, showing us that we're seeing that similar action, sort of COVID worry trade, right, where you see tech and discretionary outperforming some of those more value or cyclical based sectors. Certainly where QQQ does not have exposure, you're looking at things like energy, like financials, came under pressure here as that recovery or reopen trade sort of hit a pause over the past week.
All right, and our last chart, if we take a look at some of the performers within the Qs.
Yeah, just to take it a step further, you see some of these work from home type stocks outperforming for the week. Workday up 17%, DocuSign up over 7.5%. So you're sort of seeing beyond just the sectors. When you start to look at the individual names, they're showing the same. And it's nice to see Nasdaq-100 newcomer Peloton really making a splash in its first kind of week or few days of trading since it became effective before Monday's open. But Peloton up over 11.5%, and certainly a good start to its inclusion in the Nasdaq-100.
Certainly is, Ryan. Thanks so much for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.